All right, we are recording. All right, good morning, everybody. Today we are September the 2nd. We are almost 43 days or so from AEP. It seems like time really flew by. Where did the whole year go? And so one of the things that I asked Bella to talk about is in the Medicare world, guys, if you are not throwing in an indemnity plan, you're kind of still exposing your client. You're doing, in my opinion, I think you're doing two things. Number one is by not offering, you're not really protecting the client, okay, in more ways than one. And then secondly, what you're doing is you're setting yourself up for an agent like me to throw you under the bus. Okay. And it sucks, but it's one of those things. I ask my client, hey, so you have an indemnity plan when I'm doing a flip. And they're like, what? And I'm like, yeah, a plan that helps you with this, this, and this, and this. They're like, no. I'm like, oh, your agent didn't offer you that? And I'm like, ugh. And I'm like, all right, well, let's jump right into it because I'm not going to leave you hanging like that. So I kind of throw that other agent under the bus. And why they don't offer it, I will just tell you. Sometimes I screw up, Bella, and I don't offer it, and it's just because of time. I am just ready to get on to the very next thing. It's usually not because they tell me no. A lot of it is because I move on. So, with that being said, Bella, thank you. Bella from Heartland National. I'm going to let you take over and do your thing.
Absolutely. Well, thank you so much for having me. I will go ahead and share my screen here. And just like you said, we'll kind of focus on our hospital indemnity plan today. First, going over the product features, and then diving into that sales process, how you can bring it up to your clients. I understand sometimes it's a matter of time, sometimes it's a matter of not knowing what questions to ask or how to bring it up without overwhelming the client, right? This process, of course, throwing an additional product or brochure or insurance company, whatever it may be, at the client, they automatically know that this is an additional cost. And they also don't understand the gravity of these benefits and how they can truly benefit them or how they can find value in a plan like this when it comes time that they do end up in the hospital or experience an ER visit, an ambulance ride, skilled nursing facility, whatever it may be. So we'll kind of go over all of that today. My name is Bella Steckity. I'm your broker sales manager here at Heartland National. If you're not contracted with us already, you can reach out to Luis. He'll be happy to help you get in contact with me or get set up with that contracting process, and we'll get you contracted before AEP. I will give you a heads up that our contracting process takes less than 24 hours most of the time. We can typically send that invite out and have you approved within the same day, if not 24 to 48 hours later. So I'll kind of start with a brief overview of Heartland National as a company. We started with a Medicare supplement back in 2007. And since then, we've diversified into more of the modernized products within the ancillary space. We've seen kind of the decline in popularity of those med subs, knowing that those premiums have taken drastic rate increases. They increase as the client ages. They can get extremely expensive to afford as individuals are trying to cover all of the gaps or exposures in their current coverage. So hospital indemnity is kind of the alternative to that with a Medicare Advantage plan, knowing this is little to no premiums, right? But we have those large copays or out-of-pocket exposures in their summary of benefits or in their existing coverage. So the hospital indemnity is designed to fit like a glove around that Medicare Advantage product, knowing that when you have that large out-of-pocket exposure, we can customize a product that's going to fill those gaps for you. So we have the current hospital indemnity. Our latest version was built back in 2017. We are currently in the process of revamping that hospital indemnity, likely not available in time for AEP, so we're looking at the new year for that, right? So beginning of 2026 or very, very end of 2025. So with that, if you don't have time during those initial meetings during AEP, January is a perfect time to circle back with those clients, go over those gaps in their current coverage or their exposures, and kind of plug in the product where you see it may fit. Along with that, on the ancillary side, we have a short-term home health care plan and a cancer, heart attack, and stroke plan. And then we've also navigated into the annuity space, starting with a multi-year guaranteed annuity, a MIGA. That's a guaranteed interest rate or fixed rate that will increase their money, the principal or money that they put into an annuity over the course of the contract, whether that's 3, 5, 7, or 10 years. And then we're also introducing a fixed indexed annuity here in the next month. Very excited to offer that product. If annuities aren't something you're currently well versed in, we have a weekly webinar at Heartland National. Once you're contracted, you'll have access to register for that call, learn more about annuities, how you can offer these to the clients that are already right in front of you, right? Your Medicare clients that are also trying to protect their retirement savings. Looking at the marketing and sales side, we have a very agent-focused sales team. Most of us have our own books of business or come from the marketing or IMO side. So we understand what your day-to-day looks like as an agent, whether that's on the phones or in the field, whatever it may be, the struggles you may have with carriers. So we've tried to design our process to be as easy as possible for you for that exact reason. So having a direct point of contact, I'll make sure you have my cell phone number to reach out with any questions, whether it's after business hours or on a weekend. I'm always happy to help. Offering personalized trainings like what we're doing today. In-house agency services, like I said, same-day contracting, knowing that if you have an issue with your contract or with your licensing, pre-appointment states, whatever it may be, we can get that fixed immediately rather than submitting a ticket to a third party or something like that. And then we also have an in-house development team. So our e-apps and our agent portal are developed in-house. If you ever experience a glitch or you need to get back into a hospital indemnity e-app and you're not quite sure how, all I have to do is walk down the hall. So having that really strong internal communication in our office allows us to then have a strong external communication with all of you as agents. So with
And Beth,
that, a couple things.
I'd like to add
Go
one
ahead.
thing, and this is
Yeah,
I think it's a big plus because there's all their indemnity carriers out there, but I would just tell you, you're going to really be out of luck trying to get their personal contact number. So the fact that she's throwing it out there to us guys, and you can contact her, because I'm just like you guys, I'll be busy as can be during AEP and OEP, and I'll try to get to y'all, but you can just call, Bella, hey, what do I do here? I think that's a big point for Heartland National. So if you don't have them, guys, email me. I'll get you set up.
absolutely. Thank you, Luis. And just looking at our agent portal really quickly, like I mentioned, having that direct point of contact in the upper right-hand side, that's my cell phone number right there from the agent portal. I'll have it a little bit bigger for you at the end of today's slideshow, so feel free at the end today to text me your name. I'm happy to save you to my contacts. That way, anything you need from this point forward, I'm happy to help, and I'm there for you. Couple other things to look out for is the supplies tab over on the left-hand side. When you go in there, select the state that you're selling in up at the top. It'll bring up a list of products that are available for you to sell in that state. When you click the drop-down arrow, you'll see a variety of marketing materials, whether that's brochures, rate sheets, application packets, any claim forms, trifolds, things like that. And then lastly, the training resources tab. After today, if you'd like some additional training on this product, or if you'd like to look into short-term home health care, cancer, heart attack, and stroke, multi-year guaranteed annuity, whatever it may be, we have recorded training videos for each of these products under the videos tab. If you'd like to just go in and flip through the slide deck on your own time, you can go to the training deck slide, or other docs has important resources for you like talking points, a one-page summary of each product. It has a product availability chart outlining all of our products in all 50 states so you know exactly what you have to offer, so on and so forth. So some additional resources once you're contracted that you can jump in here for. And then last thing I want to go over is a policy search. Once you've written a policy, you can dive first into this details page. That'll show you the effective date, what their premium is, the initial bank draft, when the next premium's due, benefit summary, etc. Then you can come over to the premium history tab, see a history of all premiums paid. So if something is showing up as pending lapse, the policy is in jeopardy of lapsing because a premium payment hasn't been made, this is where you can come see exactly what went wrong. If there was an issue drafting that premium, you'll see a return description here. Some of the common ones we may see: insufficient funds, so not enough money in that bank account in order to draft their premium, or you may see no account / unable to locate account. That typically means that the account or routing number was entered incorrectly on the application. So all we need to do at that point, we know what went wrong. We can go meet back with our client and say, hey, looks like there wasn't enough money in this bank account, or looks like we may have the incorrect account number. So let's reconvene, make sure we have this all set up. We can request that customer service redrafts that premium so you're good to go and your policy stays in force. And then lastly, we have the claims history tab. We dive over there, you'll see when each claim was entered into our system, what the service date was, what they were billed, what we can pay out, and then any notes. So this is an example here of prescription drug reimbursements from our short-term home health care plan. So that's why in the notes, you're seeing the name of each medication, how much it was paid out, and when the check was released here. With hospital indemnity, if something is submitted that maybe wasn't a fully itemized bill, wasn't exactly what we need in order to get that claim paid, you would also see that under notes. Please submit fully itemized bill in order to have this claim paid. So it'll detail exactly if we're missing something, what that is, or if it was payable, exactly what's paid out. So you have the visibility to track your client's claims and really communicate with them, making sure that they fully understand what's been asked of them. If we, again, need something else, or if the check has been released, you can tell them, hey, the check is in the mail. You'll likely receive it in the next week or so. So now we'll dive into hospital indemnity.
Bella, can I add? So if one of our clients hits us up with like, hey, I went to the hospital or something that's reimbursable, the claim process, what's the easiest way to do it?
Absolutely. I have a slide for that after the product features, but just to
Okay.
kind of give you an idea briefly here, we don't have a claim form even necessary for hospital indemnity. All we need is that itemized bill from the hospital detailing how long their stay was and what they were there, what services were provided. That way we know exactly what's payable. From there, they can submit that itemized bill via email, fax, or mail. I recommend email. I think that's the easiest, quickest way. And then from there, once you've sent it via email, it's typically uploaded into that claims history tab again within 24 hours. Awesome. Great. Perfect. So we'll dive into hospital indemnity first, starting with our current state availability. All of the states in orange here are the states this product is currently available in. And then looking at a product highlights sheet, kind of going over the base features of the product. Excuse me. Fall allergies are getting to me this year for sure. Guaranteed issue window is currently 12 months. So if the applicant is applying within the age of 64 and a half to 65 and a half, so 6 months before their 65th birthday and 6 months after, they don't have to answer any health questions on the front end. They're guaranteed to be issued a policy. With that being said, when we come out with that new product again at the beginning of 2026, this GI window will be extended, likely up to 5.5 years versus 12 months, what it is currently. So 64 and a half to 70, if not a little bit past that. Looking at the underwriting process, if they're not within the guaranteed issue window, it's simplified issue. So they answer that series of health questions. If they're able to answer no to those health questions, then they're automatically issued a policy. So we're not running a script check or an MIB medical background check on the front end, right? It's just those series of health questions in order to qualify for coverage. Issue age window is 18 to 85 years old, and this is guaranteed renewable for life. So as long as the policyholder is paying premiums, they can keep this policy well beyond 85 years old. They just have to apply within that issue age window. So when they're applying for coverage, need to be between the ages of 18 and 85. As far as the rate structure, this product is issue age rated, meaning that the premiums do not increase as the client ages. So much different than what you'll see on a med sup, right? Where that product is taking rate increases every year or every few years, every 5 years, whatever it may be. This product is not increasing as that client gets older. If they apply at 55 years old, they keep that 55-year-old premium rate for the lifetime of the policy. These rates are also unisex. Males and females pay the same rates. Also, uni tobacco. We don't charge an additional premium or ask any health questions about the use of tobacco. And then lastly, we offer a 7% household discount. If the individual is living with anyone over the age of 18, it doesn't even have to be their spouse. The second person doesn't have to be applying for coverage either. We offer 7% off of their monthly premium. There are 3 states in which we do need 2 applicants. That was a state requirement, not a Heartland National requirement, in order to have that household discount. And those 3 states are Ohio, Oklahoma, and Illinois. Likely that will be changing once we file the new product and again launch that in the beginning of 2026. Pre-X on this product is 6 months, so if a claim is filed within the first 6 months of coverage that's related to a pre-existing condition, this would not be covered. So for example, the individual has a history of back pain, they've seen a physical therapist, they've had x-rays done, had follow-up doctor's appointments, whatever it may be. Their hospital indemnity goes into effect, and then they have a back surgery in the second month. This would be a claim, again, filed within those initial 6 months of coverage that's related to a pre-existing condition, so something that wouldn't be covered. If that back surgery occurred 8 months into their plan, it would be covered at that point since they're outside of the pre-X window. The pre-X applies to everyone, so even if they applied within the guaranteed issue window, they still have that 6-month pre-existing condition window in place. We also have the contestability period, which is 1 year. That's only for those who applied outside of the GI window, so those that answered health questions on the application. If a claim is submitted within that first year of coverage, we would then pull medical records, again for those outside of the GI window, just to make sure that they were truthful on those health questions at the time of the application. As long as everything comes back clear there, we don't see that they intentionally lied on one of the health questions, then we can proceed with paying coverage from there.
Hey, Bella, how often have you run into that scenario?
Into contestability, finding that
Yes.
somebody has been untruthful.
Yes.
I don't deal with claims primarily, so I'm sure that the claims department has seen it more often than I have. I don't, it's not something I come across very often, but there are definitely scenarios where maybe the client wasn't entirely truthful with their agent either. So the agent was kind of left in the dark there, thinking that this was completely payable or this wasn't pre-existing or whatever it may be, and then it comes back in medical records. Oh well, this client was very aware that they had a cancer diagnosis, or they were very aware of whatever it may be, underlying heart conditions. So with that being said, we understand, of course, it's not always the agent's fault. It could very easily be the client being untruthful, and that's something that I would try to make them aware of when they're applying for this coverage is, hey, if you're not able to answer these health questions, right, this could be a matter of trying to submit the claim and then your policy gets rescinded because they find out you were untruthful. So I would be very transparent about the pre-X and the contestability window. And then also knowing if an individual doesn't qualify for this hospital indemnity plan, our short-term home healthcare plan may be a perfect plan to pivot to. Underwriting is much less extensive. It's 3 to 4 health questions there, and you can still add a hospital confinement rider. So it's not, this isn't your only option for inpatient hospital coverage. If the individual maybe doesn't qualify, can't answer all of those health questions, no, truthfully, then that's a good product to pivot to at that point.
And yeah, so don't white label. Don't just go no, 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 and don't ask because it's going to come back. As soon as they file that claim, ew. So you want to have that clear conscience. Hey, I asked, you answered, and it
Right.
is what it is. And that way you can just walk away with it. Or, usually most of my, I'm face to face, and I mean, I just literally turn the screen around. I'm like, hey, look at these questions. Are there any one of these that you're going to answer yes to? And it's on them. That way you can sleep good at night.
Absolutely. Absolutely. Looking at these highlights over on the side, we've gone over most of these already, knowing that since this is an indemnity plan, these are cash benefits paid directly to the policyholder. So when they, again, submit that itemized bill for their hospital stay, ambulance ride, ER visit, whatever it is, they're paid a fixed benefit in cash. So there's no coordination of benefits, there's no network or restrictions that they have to work around. This is cash sent directly to them for in the form of a reimbursement for the services they had provided. We do have dual applications available. So if you have a husband and wife applying for coverage at the same time, makes it easier on you as an agent. You can fill out both applications at once. It's also better for the policyholder knowing that we have a $25 application fee that's tacked onto the first month's premium. That second fee on dual applications is waived, so it's still $25 versus $50 if they were to apply separately. That application fee is something that we are doing away with the new product, again, launching in 2026. So $25 application fee will be no longer once we have that new product available. Lastly, you can write these policies up to 90 days out, so the effective date being up to 90 days out from the application date. So if you're writing something in October, November, you know that you can start this coverage on January 1st along with their additional coverage as well. So looking at the base plan here, first, hospital confinement, your inpatient hospital stay. Again, this plan is very customizable. So for an individual who you're looking at their summary of benefits, you can design this plan to fit exactly around their exposures. So you can choose between $100 and $600, that increases in $50 increments for their daily hospital benefit. And then you can also choose how many days that benefit is payable, 3 through 10, 15, 20, or 31 days. We'll go over an example here in a little bit, looking through an actual summary of benefits. But to give you an idea here, for an individual who maybe has a $295 copay for days 1 through 6 in the hospital, you can structure this plan to have a $300 benefit payable for 6 days. That way we know their out-of-pocket exposure is completely covered there. With that hospital confinement benefit, we have a 60-day restoration period. So if that same individual ended up in the hospital for 6 days, they've received all of their benefits or used all of their benefits up, they go into a 60-day restoration in which those benefits fully restore back to 100% to be payable again. That's a continuous cycle. So if they continue to use up all of their benefits and go into that 60-day restoration, they'll restore time and time again there. Then a couple built-in benefits to the base plan, first being a built-in emergency room benefit. This pays $150 per trip to the ER, up to 4 times per calendar year, which is also separated by that 60-day restoration. Then we also have a built-in observation room benefit. So if an individual goes to the ER and then maybe they're sent to an observation unit, they're not admitted to the hospital, so they don't qualify for their hospital confinement benefit. However, they were still kept in observation for a few hours or a day, several days, whatever it may be. So this would pay their daily benefit amount, what they selected up here between $100 and $600, for their time spent in observation. So the great thing about that is there's no time minimum. Even if they're only kept in observation for a few hours, like I said, they would still receive that daily benefit amount for their time in an observation unit. That's payable up to 3 times per calendar year. Any questions so far with the base plan here?
I would just, one of the things that I'll tell you, and Veronica asked a question. I'm gonna start. The base plan, at least in my area, it's about 12, 13 bucks a month. I mean, it's pretty cheap. I mean, if you can't sell that, damn. Sometimes, of course, there's no money, but 12 bucks, pretty cheap.
Right. And some coverage is better than none. So if you're
Right.
working around a tight budget and the individual maybe can only afford the $100 benefit per day or $200 benefit per day, that's better than nothing. So in the event that they do end up in the hospital for several days, they have some sort of cash benefit coming in to help cover those copays, even if it's not the entire cost, right? So yeah, I'll go over some examples too, looking at a 65-year-old, what the premium cost is for various levels of coverage. So we'll go over some examples for you as well.
Okay.
Awesome. Okay, so we have 7 available riders on this product, starting with the lump sum cancer benefit. These benefits range from $1,000 to $20,000, and that's paid out in a lump sum upon cancer diagnosis. So first, for internal cancer, this includes melanoma. I know melanoma can be considered a form of skin cancer. However, it is invasive. It does require treatment. So we classify that as internal cancer here. That pays 100% of their benefit amount. So what they selected between $1,000 and $20,000. Carcinoma in situ is known as stage 0, non-invasive, pre-invasive cancer before it's metastasized. This pays out at 25% of their benefit amount. And then skin cancer is what we classify as the basal and squamous cell diagnoses. This is something like getting a mole removed that was diagnosed as skin cancer. That would pay 5% of their benefit amount. And then with this rider, we have built-in recurrence and restoration benefits. This is pretty rare to find with cancer coverage that this benefit is built in. So once 100% of this lump sum has been paid out, these benefits gradually restore back to 100% over the course of 5 years. So it's protecting the policyholders against that subsequent diagnosis or second diagnosis in their lifetime. So again, gradually restoring back to 100% over the course of 5 years after that client has gone into remission or they're no longer receiving treatment for the initial diagnosis of cancer. Awesome. Oops, I flipped all the way to the end there. No. Okay, here we go. Next rider is lump sum hospital confinement. So with the base plan, you have the daily benefit of amounts, right? Between $100 and $600 for your time spent in hospital confinement or an inpatient hospital stay. This rider would pay a lump sum for your inpatient hospitalization on top of those daily benefit amounts. So you can choose between $500 and $2,500, and that's payable up to 2 times per calendar year. The lump sum outpatient surgery rider would pay for a procedure or surgery performed in an outpatient surgery facility. This pays between $100 and $1,000 up to 2 times per calendar year. I will tell you an example of a client I had, an agent that I work with and one of their clients. The policy went into effect in September. She had carpal tunnel surgery on both of her hands. That was 2 separate procedures for both hands. So this outpatient surgery rider paid out twice in October and November, and then January hit and she had cataract surgery in both of her eyes, which again was 2 separate procedures or 2 separate surgeries. So that again paid her outpatient surgery rider twice for those 2 different cataract surgeries in both of her eyes. So within her first year of coverage, starting in September, it reset in January and she had 2 more outpatient surgery riders. That benefit had already paid out 4 times for her. And something that I've seen is these outpatient surgeries are becoming increasingly popular, whether it's for a hip replacement or a knee replacement, or if it's a heart procedure, whatever it may be. They're oftentimes performed in these outpatient surgery facilities. And I've ran into several instances where the individual doesn't have this rider in place, and then they stay the night in a recovery room following their surgery, but that isn't payable because it wasn't an inpatient hospital stay. So it wasn't deemed as hospital confinement for that recovery room, right? Versus if they had this lump sum outpatient surgery rider, that would have paid up to $1,000 for that procedure. So as these are becoming increasingly popular, it's something that I would strongly recommend that you emphasize to your client. Hey, in the event that you have a surgery performed, what are the odds it is in an outpatient surgery facility? Would you like to put some protection in place there to provide you benefits? This rider, I will say, the premium structure is being completely rebuilt when we build that new plan. So while it may seem a little bit pricey now for somebody who's 65 and older, that premium will be changing again with the new plan. Next rider is skilled nursing facility. Typically what we see on a Medicare Advantage plan is days 1 through 20 in a skilled nursing facility have a $0 copay. And then for days 21 through 100, that jumps up pretty drastically to $200, $210, $190 per day, right? So this benefit, you can choose either $150 or $200 for a daily benefit covering days 21 through 100. So again, this plan is designed to fit like a glove around Medicare Advantage, picking up where that MAPD plan drops off. So they cover days 1 through 20. We pick up and cover days 21 through 100. And then last 3 riders here, the ambulance rider pays a fixed $200 benefit per trip, up to 3 trips per calendar year. With the new hospital indemnity plan, this rider will allow some flexibility, likely very similar, if not the exact same as our short-term home healthcare plan. So allowing you to choose between $100 and $500 for that ambulance benefit that's payable up to 4 times per calendar year. So again, that will be changing with the new plan. Wellness benefit pays $25 per health screening test, up to 4 times per calendar year, so up to $100 in reimbursements for the covered wellness tests, which are listed over here. Some of the big ones being your annual physical exam with your PCP every year, immunizations, getting your flu shot, pap smears, mammograms, chest x-rays, colonoscopy, blood work, stress tests, vision and hearing exams, so on and so forth. And then lastly, dental, vision, and hearing. I'll go to the next slide here to talk about that in some further detail. 2 benefit amounts that you can choose from being the maximum per calendar year, either $1,000 or $1,500. We do have a $100 deductible before those benefits set in, but a couple of things aren't subject to that. So we reimburse $75 per dental cleaning every 6 months, so twice per calendar year, and then $50 for a vision and or hearing exam once per calendar year there. So down at the bottom, you can see after the first 6 months of coverage, we'll cover more of the minor procedures like fillings, root canal treatment, eyeglasses, contact lenses. Then after the first year of coverage, we'll cover more of the major procedures such as bridges, crowns, dentures, extractions, prescription eyewear, hearing aids, etc. This table up here is showing you that in the first year, we cover 60% of actual charges, second year, 70%, three and beyond, 80%. The important thing to note here is that we're covering a percentage of their actual charges, not the average in their zip code. So what you'll see with a lot of these dental, vision, and hearing plans is they're covering the average that they see in that area. What is the average that an individual is paying for a root canal treatment? And we'll pay a percentage of that, right? So this would pay a percentage of their actual charges, what we see on their itemized bill, rather than just the average in their general area. So looking at kind of a summary of those benefits before we dive into the sales process, with the base plan, you have your hospital confinement benefits, built-in emergency room, and built-in observation. And then those 7 optional riders that you can add on here. With the new plan, we will have a couple of new riders available, one being a therapy rider, introducing physical therapy, occupational therapy, chiropractic services, acupuncture, in the form of a rider. We will also have several new built-in benefits, such as urgent care, paying a benefit for a visit to an urgent care facility, or benefits for mental or psychological hospitalization needs as well. And now diving into that sales process. Like I mentioned, this can become overwhelming for the client. They don't fully understand what these benefits mean, what the need for it is. So for that reason, I really like the needs-based selling approach. How can we identify the needs of the client, ask them the right questions to get them talking and answer for themselves why they need a plan like this before they even know the plan exists. So starting with identifying those needs, what are some of the effective questions that we can ask? First, do you know if you were hospitalized tomorrow, how much you would be subject to paying? Do you know if your current plan covers ambulance transportation? And then we can set up a math equation going through that summary of benefits. We've asked a couple questions and okay, let's look through the summary of benefits and start pointing out or circling some of those high copays. Set up a math equation and say, would a $2,000 hospital bill create financial stress for you, right? Or set up a math equation on the other side. If you had a hospital indemnity plan, this is how much this plan would pay you for these services, and this is what your copay would be. So we'll dive into one of those examples as well. But knowing that when we're looking at the sales techniques to use, identify those out-of-pocket exposures on their summary of benefits, right? Walk them through a scenario with a math equation. Of course, never with the intention to scare clients into getting coverage, right? But allowing them to understand this is what you're subject to paying in the event that something happens with your existing coverage. So if we can bridge those gaps for you and find a plan that's going to plug in those exposures or the gaps in your coverage, that way you're not subject to paying those high copays in the event that something happens. Or also reassuring your clients, I recommend this to every single Medicare Advantage client that I have, or over 85% of my clients have this protection in place if they have a Medicare Advantage.
Hey, Bella, and I want to add, I like
Yes.
that FOMO. Guys, if you don't know what FOMO is, the fear of missing out. And then also a lot of these seniors, like they're kind of like, like the herd, safety with numbers. Most of my seniors to add this plan. Okay. That kind of gives them that, oh, okay. Well, if most of them take it, these little words that you throw out in the sales process helps steer. I like to steer. Hey, I'm going to bet. I'm going to throw out there. This is how you're going to, how this plan's going to benefit you. But I do like throwing out most of my seniors add this plan or take this plan, however you want to word it.
Right. Or another way you could word that is I recommend this to every Medicare Advantage client that I have, or I never offer Medicare Advantage without offering hospital indemnity because I truly see the value of protecting you from those out-of-pocket exposures.
Correct. I like
I love
that.
it. I love it. So looking at, like I said, an example summary of benefits, this individual has a $295 copay for days 1 through 6 in the hospital. After that, their copay is $0. Something I would remind your clients of here, yes, this is for your first 6 days in the hospital. This is also a copay that resets every period of care. So if you end up in the hospital for 6 days and you have that $295 copay per day, and then 3 months down the road, you end up in the hospital again, that's a copay that's going to reset. You now owe that $295 for days 1 through 6 again, right? Resets every period of care versus our hospital indemnity has that restoration benefit. So it resets every 60 days. In the event you're in the hospital for 6 days and then 3 months down the road, you're in the hospital again, your benefits have fully restored back to 100% at that point to be payable again. Emergency room. This individual has a $135 copay for an ER visit. We have that built-in emergency room benefit that pays $150 per trip to the ER up to 4 times per calendar year. So even though their copay is only $135 here, we still pay the full $150. Remember, there's no coordination of benefits, so it's still paying the full fixed benefit that they signed up for, regardless of what their copay is. Even if they end up being admitted to the hospital, so this copay is entirely waived, it's a $0 copay, they would still receive that $150 reimbursement for the built-in benefit. Ambulance. This individual has a $290 copay for their trip in an ambulance. Remember, we have that rider that pays $200 per trip, up to 3 trips per calendar year. This rider for a 65-year-old is, I think, $2.40 per month. It's extremely affordable, kind of a no-brainer to add that on there for less than one of your Starbucks coffees every month, right? To pay that little in premiums and then have that protection to receive benefits for a trip in an ambulance. A cancer diagnosis. One of the most common ways or the quickest way that an individual meets their maximum out of pocket is with a cancer diagnosis, knowing you have a 20% coinsurance up to your maximum out of pocket or whatever that may be. So this is when I would strongly suggest adding on that lump sum cancer rider or taking a look at our lump sum cancer, heart attack, and stroke standalone plan as well. So again, like I said, adding the lump sum cancer benefit rider to protect them from that out of maximum out of pocket, knowing that this is going to reset in January, right? So what happens when an individual is diagnosed with cancer in October? They start going through treatment, hit that MOOP, their maximum out of pocket fairly quickly, knowing how expensive treatment is. But then January hits and that maximum out of pocket resets for them to pay again before their benefits kick in. So I would always recommend if you are adding the lump sum cancer rider, protect them for 2 years worth of their maximum out of pocket. That way, like I said, if treatment goes through January 1st, they have the protection from meeting that maximum out of pocket for the second time. Skilled nursing facility, like I said, $0 copay for days 1 through 20. $203 copay for days 21 through 100. Add that skilled nursing facility rider for a $200 benefit per day for days 21 through 100, much more affordable cost per month than paying for long-term care, whatever it may be, and having that protection again against days 21 through 100 here. So now that we've identified those out-of-pocket exposures and walked through the summary of benefits, we can position the product as a solution from here. So as we're going through those high copays, maybe you say, Mr. Jones, you have a $295 copay for days 1 through 6 in the hospital. Don't let that scare you, however. I have a solution or I have a plan that can protect you from those costs. We'll get you reimbursed entirely for the cash that you have to spend on those copays. And like I said, set up a math equation at this point. So using that same example of an individual who has a 6-day hospital stay, $295 for days 1 through 6 in the hospital, they're subject to paying $1,770. For that ambulance ride, a copay of $260. And for the emergency room visit, say they take a trip in the ambulance, they go to the ER, but then they're admitted to the hospital for 6 days, that emergency room copay is typically waived, right? So they don't owe anything for the emergency room visit. In all, in copays, this individual is subject to paying $2,030. Versus if we get a hospital indemnity plan for them that pays a $300 benefit for days 1 through 6 in the hospital, they're receiving $1,800. For an ambulance ride, they have that $200 rider. And for an emergency room visit, they receive that $150 reimbursement, again, regardless what they pay, even if it's waived, right? We're paying attention to whether they went to the ER or not what they owe for it, right? So we're paying attention to their itemized bill, not their EOB or explanation of benefits from their Medicare Advantage client or Medicare Advantage plan. So in all, their hospital indemnity would pay $2,150 for this same incident, but they only owe $2,030, right? So in this example, they're making a little bit of money on the cash reimbursements that they can use towards maybe the additional needs, whether that was meals while they were in the hospital or maintenance at home while they were in the hospital, recovery after the hospital, whatever it may be. And then to look at what they're going to pay for this, right? So, yes, this all sounds great, but what am I going to pay per month to have this protection in place? For a 65-year-old, a $300 benefit payable for 6 days is $28.80 per month. Again, that ambulance rider, $2.40 per month. And that emergency room benefit is nothing, right? That's built into the base plan. So in all, this is $31.20 per month. If they live with someone over the age of 18, we take that 7% household discount off, so they pay $29.02 per month. And again, this is issue age rated, so a premium that is not increasing as the client ages. That $29.02 per month is not going to increase as they get older. That's the same premium rate that they would keep for the lifetime of the policy. And then explaining the benefits at a level that the client understands, right? What are the things that are most important to them? And how can we, again, knowing that some of this terminology can become overwhelming, they're not entirely sure what all of this means, what are some of the main points to hit on at a level your client does understand? It's customizable coverage. We are going to build a plan that fits around your needs and your budget. So this is going to be customizable to you specifically. There's no network or restrictions. You can continue going to the same hospital, same primary care physician, same dentist, same eye doctor, whatever it may be, and you don't have to change a thing about that, right? We have a 60-day restoration. In the event that you use up all of your benefits, you go into that 60-day restoration and they fully restore to be payable again. These are cash benefits, as a reminder, paid directly to you as the policyholder, and there's no coordination of those benefits. So again, using that example, in the event that you owe $2,030, this plan is still paying you $2,150. And then lastly, a couple of built-in benefits for the emergency room and observation room, knowing that going back to sales 101 or marketing 101, consumers as a whole love to hear that they're getting a deal. So using the words like built-in or package, this is included in the one premium price. For this one price, you have your inpatient hospitalization benefits, you have an emergency room benefit, and you have an observation room benefit. So creating a package or using some of those buzzwords to help your client understand at this one fixed cost, these are all of the benefits that I already have included. And then lastly, when it comes to overcoming objections, what are some of the common objections we may see, and how can we, again, explain the value of the product or combat those in order to explain how your client can benefit rather than focusing on the cost or whatever it may be? So first, I thought I just signed up for this. Won't my Medicare Advantage plan cover that? Again, I would remind them of the high copays that reset every period of care, right? If you end up in the hospital 6 days and then 3 months down the road, you're in the hospital again, that's a copay that resets every period of care. And then second, something I think we see a lot is I'm healthy right now, I don't need hospital coverage, or I'll think about it, I can always add this later on. To that, I would say that makes right now the perfect time to apply. Because you're healthy or you're within that GI window, we know you can qualify for coverage. And remember, this product is issue age rated. So I would position it as this is the most affordable that premium will ever be. If we decide to wait 3, 5 years down the road, you're subject to a higher premium cost at that point, and you're also risking those changes to your health in the meantime. Versus if we know we can secure you with this affordable coverage right now, this is the lowest rate you'll ever see. This point forward, you have that protection in place. So if anything happens, you are protected from it. So when it comes to creating your client's policy, finding out what's most important to them, what their budget is, and then of course customizing their coverage from there with all of the optional riders. And then when it comes to filing claims, like I said, you can follow or track the history or kind of process of a claim through the claims history tab. We try to make this as painless and as easy as possible for you, so we don't have a claim form necessary to fill out. All we need is an itemized bill or a UB04 form that can be submitted via email, fax, or mail directly to the claims department. If you are submitting this on your client's behalf and you're submitting it directly to the claims department, feel free to copy me on there as your broker sales manager. I can also track the progress and kind of help communicate with you, making sure that everything's taken care of, or if anything else is needed, exactly what we would need to get that paid out for you. Couple of frequently asked questions before we wrap up here. What happens if I use up all of my benefits? Remember, you have that 60-day restoration. Benefits fully restore back to 100% to be payable again. And then second, what happens if I don't qualify for this plan? I mentioned this towards the beginning. If I can't answer all of those health questions, I'm outside of a GI window. At that point, I would recommend pivoting to our short-term home healthcare plan, which only has 3 to 4 health questions to qualify for, and you can still add a hospital confinement rider, which provides some coverage for those inpatient hospitalizations. So a good substitution, again, in the event that someone doesn't qualify for that hospital indemnity, that you can still provide them with that hospital confinement coverage. So at this point, I have my contact information up here. Like I said, that's my cell phone number. If you want to text me your name, I'll save you to my contacts. Feel free to reach out with any product questions from this point forward. My job is to be here and support your success in any way that I can. So if that's providing additional training or answering product questions, providing marketing materials, I'm more than happy to do so.
Guys, unmute yourselves on the bottom left if you want to ask a question. Pretty self-explanatory. We got our contact information here if you guys need it. But if you don't have a contract with Heartland National, hit me up. That way I can send you the contract and you'll be set up in a day or two. And then you just need to throw it out there every single time. Just throw it out there. I kick myself in the butt when I'm trying to get somebody out of here because I got stuff happening. And I'm like, oh, I just missed out on the easiest sell. And doing it at the same time that you're doing the explanation for a Medicare Advantage is the easiest thing to do. Man. And one of the things that I do, Bella, when I do it, is I do throw in the cancer. It adds about $30 or so to the premium to do the 10K, brings my premium into the $40 range. And guys, all you've got to do is just look at them and just say, hey, we good with this? And they're like, I can't afford that. You start inching your way down by $1,000 increments on that cancer to get into a budget that can help. It's not that hard, guys. It's just a matter of throwing it out there. And of course, you'll get them to say no. But at least you tried. At least you offered it.
Hi, Bella. This is Virginia.
Virginia.
Hey, Bella. I just want to say great presentation. Thank you so much.
Oh, absolutely. Thank you for being here.
Yes.
And I'm happy to help anytime you need it.
Thank you. I am contracted with Heartland, and I had a really good experience. I just want to share how they came through with one of my, well, it was, I think, the first policy I sold. I haven't sold much, but I'd like to get more involved. They had a colonoscopy, and Heartland paid out for the day. I guess it was the outpatient surgery.
Uh-huh.
So that went very well.
Great.
But I did want to ask you, what is the difference between hospital confinement and hospital observation?
Yeah, great question. So if an individual is admitted to the hospital, that's considered inpatient hospitalization, which is hospital confinement. So that's what those daily benefits are for an overnight stay in the hospital in which you've been admitted. Observation, however, is a little bit different. You're not admitted to the hospital. So it's not considered inpatient. It's typically labeled on the itemized bill as observation. Maybe they want to keep you for a few hours before they send you home after you've been given a medication or whatever. So at that point, that's why we have that built-in benefit, knowing that if you're not admitted to to the hospital and you don't qualify for your hospital confinement benefits, you can still receive your daily benefit amount for that time spent in observation. So that's typically just how it's labeled on their itemized bill. If they do experience some sort of stay in the hospital and you receive that itemized bill, it'll detail very clearly for you whether that was labeled as inpatient or if it was labeled as outpatient or observation.
Okay, wonderful. So observation, they're sitting in the emergency room in a room? Would that be considered?
There's typically an observation unit in the hospital. So after going to the emergency room, then you're moved to an observation unit. So it's kind of the in between, not necessarily in the emergency room, but also not being admitted to the hospital. So
Okay.
yes.
Okay, that sounds good. Thank you. And as far as the what they need to present to Heartland, is that when they check out of the hospital, they get the discharge papers? Is that what you're looking for?
Yes, yep. So after their hospital stay, they can request an itemized bill or UB04 form directly from the hospital. And then as soon as they have that, that's when they can submit it to us via email, fax, or mail, and we can pay their cash benefits directly to the policyholder based off of that itemized bill.
Okay, wonderful. Thank you very much.
Absolutely.
Have a good day. Thank you.
Any other questions for Bella? Just unmute bottom left, guys. If you guys don't, today's payroll for me. Hey, I like my checks and then I got to disperse them. I'm like, God, I wonder if I could keep the money.
Oh
Man,
no.
how cool. Man. It is what it is. It's a way of doing business. All right, guys. Hey, I appreciate you all being on here. Again, hit me up with an email if you need contracting. Otherwise, start prepping, guys. This AEP, I don't know. People are saying it's going to be a crazy one. I'm kind of like, I think the crazy one was last year where we had
Yeah.
a change in the prescription drug engine. Um, but I think this year is just kind of normal unless I'm missing something. Now, ACA is going to be freaking hell. That, ugh, oh, that's going to be a huge mess. But AEP, business as usual, guys. All right. Bella, thank you for your time. I appreciate that.
Absolutely. Thank you for having me here. And again, happy to help support your success in any way that I can moving forward. So I appreciate
Thanks
you,
again.
Luis, and everybody for being on here.
Hey guys, and don't be shy. Hook up with Bella. If you have any questions, I'll try to answer them. But she's given us her email and cell phone. If you need her, she's our rep. Get a hold of her. Thank you.
Absolutely.
All
Bye.
right.
Thank
Bye bye,
you.
Thank
Bella.
you.
Bye bye.